Hello, welcome to Hello Test. Hello, good morning to all. Welcome to today's daily dose of market insights by OANDA. I'm Kelvin Wong here, the senior market analyst of OANDA Asia Pacific. Very good morning. Today will be Tuesday, the 6th of February 2024. So before we start our daily dose of market insights, let's take a look at the disclaimer slides first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so before we jump straight into the the short-term technical outlook of the various asset classes, so that's the gist of the daily dose. Let's have a recap of what happened last night during the European session and the US session. So what we could see over here is we have a bout of we call it downside pressure or minor risk of behavior in the European indices. So European indices fare less bad versus the Asia Pacific indices yesterday. So the German DAX is only down negative 0.10%, despite a rise in the global we call it bond yields due to a stronger US job data, the non-farm payroll data, and as well as the latest FOMC monetary policy guidance to actually push back the first rate cut that is highly anticipated in March. Right now, push down the calendar to May. And yesterday, the US Treasury bond yield continued to rise above 4.10%. So what we could see over here is that there was actually a initial sell-off at the start of the US session. So all the benchmark US indices actually opened pretty much on the negative tone, with the S&P 500 and the Nasdaq 100. They actually has a worse intraday drawdown. That means the maximum loss that hit yesterday was negative 0.8%. Then the Nasdaq was down negative 1%. But what's interesting over here that throughout the later part of the session, there is actually support coming in to actually build up the US stock market, primarily focused on the US mega cap stocks. So throughout the end of the session, the losses were mitigated. So the SPX managed to close much as a lesser degree magnitude, initially down negative 0.8. At the close, is only down negative 0.3%. And what's interesting, the Nasdaq down negative 0.1% intraday, but at the close, it managed to only record a loss, a minor loss of negative 0.17%. So what's going on in the US market? So what we could see over here is that if you look at my screen, the US market right now is being supported by the mega cap stock. Okay, let me. All right, so what you could see over here is a very strong performance on Google yesterday. Nvidia especially rising on this AI optimism that is still intact, positive 4.8%, as well as Apple up close to 1% after the official sale in US of their latest product called Vision Pro. Google Vision Pro is that weird looking goggle that you wear, then you dive straight into augmented reality. But that is driving a positive tone on the market. But do not forget over here is that yes, we may start to see a very weak market breadth on the we call it the carpet heat map. Okay, quite the heat map of the S&P 500 performance, more red than green. But do not forget, all these green are heavily market cap weighted. So as long as there are still some support coming in this mega cap company, there is very hard, we call it a chance for the US major stock indices, especially the S&P 500 and the Nasdaq 100, to start to actually derail off from their short to medium term uptrend phases. All right, so this is the key takeaway that I share with you all for today in terms of linking the dots. And as well as we know that the US Treasury yield do play a part in the performance of risk on risk off behavior, and is also driven by dollar strength resurgence and dollar strength weakness. And if you look at the current dollar strength chart, by taking a look at the dollar index, I'll share with you all. So you look at the dollar index over here. Yes, we have a very strong positive follow through on ex-post non-farm payroll data. All right, it going to surge yesterday, and right now it's actually inching close to a key resistance zone at 104.80, 104.85, 104.85. Pardon me, 104.85 over here at 104.40. What's this level? Is actually the 61.8 Fibo retracement of the previous medium-term decline from the high of 3rd of October all the way down to 27th of December. And right now it's coming back to a level in this, previously there's this December level over here. So this level where we start to see a last leg push down on this previous medium-term downtrend in the dollar index. So this December, we quite decline in dollar index. That means dollar weakness coming back into the picture during earlier part of December was due to that very dovish guidance given out in the December FOMC meeting, where in the press conference and as well as the release of the FOMC Federal Reserve dot plot, indicating to us that actually drove up the bets of the Fed dovish period and the highly anticipated March rate cut that was actually kickstarted during that point in time. So right now, we are actually back to that previous psychological event, all right, in terms of dollar strength. So if we start to see, especially towards the end of today's US session, this is the daily chart, and we start to see signs of bearish reversal candlestick from a daily perspective, because it's already hit close to a key medium-term resistance level, like highlight on my screen over here, 104.85. That could actually be pretty much a resounding tone to the stock market. That means indicating to us that this dollar strength momentum is more corrective in nature rather than a start of a impulsive medium-term uptrend. Okay, so this is the one thing I'll share with you in terms of linking the dots by putting into emphasis of what I call inter-market correlation. Now, with that in mind, right, let us take a look at some of the key economic events that took shape yesterday in terms of economic indicator. So economic indicator yesterday that is also driving that dollar strength was due to the ISM number. So if you look at the ISM data services data that was released yesterday was stronger than as expected. So 53.4 came in for the month of Jan versus the expectation of only 52 and way above 50.5 that was recorded in December. Okay, so while we are speaking over here, the next upcoming event that is taking shape later today will be the RBA interest rate decision that is out at 11:30 a.m. Singapore time. That means it's about 20 minutes from now. So with that, right, RBA, the market is expecting 4.35%. But what's most important over here is that previously in the RBA meeting, during the because they also released the monetary policy statement. So monetary policy statement at that point in time, they are actually concerned that it was aware that progress in bringing down inflation back to the 2 to 3% goal was slower than earlier forecasted. And also he cautious that the governor, based on her previous, we call it public speeches, saying that inflation was increasingly driven by excessive demand at home rather than supply from abroad. Okay, but prior to this meeting in RBA meeting today, if we look at the prices, the inflation number from Aussie land. Okay, let me share with you the monthly CPI indicator. So the monthly CPI indicator in Australia at the point in time that was released for the month of December, actually it inched down 3.4% annualized. Okay, so if you look at the last 3 months, inflationary pressure in Australia has indeed starts to decelerate. All right, decelerate. You could see my screen over here, 3.4% annualized in December versus 4.3% annualized in November. And that 3.4% annualized in December was actually the third straight month of moderation in annual inflation. Okay, and also the lowest reading since November 2021. So all in all, what we could see over here is that actual data in Australia seems to be in contrast with what RBA is guiding the market in terms of their own inflationary expectation. So market will be pretty much interesting to see, given this set of slowdown in inflation data, will RBA starts to actually tweak their monetary policy guidance, all right, from this point in time. So we shall see once the data starts to release at 11:30 a.m. Singapore time. So with that, let us now straight jump into the short-term technical outlook, starting with the Aussie dollar first, since I just mentioned the RBA, which will have an impact on the Australia dollar. So let us straight jump into the short-term technical outlook. So with that, let me expand my screen so that you guys could see. All right, Australia dollar. So if you recall that Australia dollar yesterday, we flipped back to a bearish bias with the support level to watch at 64.50. So prices almost hit 64.50. So yesterday during the US session, it printed an intraday low of 64.68 level. Okay, 64.68. So what we could see over here is that very interesting. The push down that formed the lower low on price action doesn't actually came in line with the price action of the hourly RSI. So hourly RSI managed to flash a higher low instead at its oversold region. So what is indicating to us that yesterday's push down in terms of price action, the downside momentum has started to ease off. So with this downside momentum easing off condition as being flashed by that bullish divergence seen on the hourly RSI, that could be a sign of a short-term rebound taking shape into play within this short-term, medium-term downtrend that is still intact. Why? Because price action has clearly broken down below the 200-day moving average and as well as trading below the 20-day moving average since 13th of Jan this year. Okay, so all in all, right, given this mixed element on the Australia dollar, I would still right now err to the cautious side to not so to be have a so strong of a bearish bias on the Australia dollar. So I'll be flipping to a neutrality stance instead for today, 65.20, capping the top side of the range, and bottom side of the range will be 64.50. Only an hourly close below 64.50 will see the continuation of this impulsive down move towards the next to expose the next support level at 64.10/63.90, which is a 0.618 Fibo extension, taking from the high of 28th of December, project it to the low of 18th of Jan, put it up to the top of 1st of February, and as well as this congestion area over here. And if we do the Fibo retracement of the previous medium term up move from 26th of October last year all the way up, pardon me, let me remove this, sorry about that. Okay, taking from the low of 26th of October last year all the way up to 13th of December. Okay, give me a minute, let me put it. Okay, so that's actually 76.4 Fibo retracement, all converging at 64.10/63.90. So this gives me how I derive my next key significant short-term support level after the break of 64.50, which is 64.10, 64.63.90. All right, so net based on a mix of elements, I decided to be less bearish on Aussie dollar today. So I'll flip to a neutrality stance between 65.20 and 64.40 instead. Dollar yen. So on the dollar yen over here, so what we could see on dollar yen continue to be kept by this 14880 level, and price action, the RSI going to shape lower high. So with that, I'll be still using 14880 as my short-term pivotal resistance level on the dollar yen. Still maintain that short-term bearish bias, but price action got to break down below 14785 to actually give me to increase the odds of this bearish bias. So we need to have an hourly close below 14785 to expose the next support level for today. I'll put it at this level here at 14675/14625. All right, so still maintaining that short-term bearish bias on the dollar yen. However, if we start to see an hourly close above 14880, then this bearish bias will be invalidated to potentially see a squeeze up to have the next major resistance, to expose the major resistance zone at 150.20/150.70. European currency. So European currency over here, let us start with the euro dollar. So euro dollar travel down as expected and hit the support level at 107.40, which is the lower boundary of this minor descending channel that I drew from the high of 11th of Jan. So with that, right, given that it really hit the lower boundary of the channel and is coming very close to a support level, 10710 graphical support level over here, and as well as 61.8 Fibo retracement taken from the previous medium-term up move from the low of 4th of October all the way up to the high of 28th of December, which is 61.8% Fibo retracement. So given we are now approaching a key graphical confluence of support level pointing key what we call it separate elements, different elements that are linking together to a similar support. So this is what I call the elements of confluence at 10710. So I'll be using 10710 plus price action already hit the support level yesterday at 10740. So 10710 key short-term pivotal support level. So I'll be flipping to a bullish bias for today, at least in the short term, to see at least a potential minor counter trend rebound towards the first resistance level to watch, intermediate resistance watch at 107.95. All right. So i.e. given that it's coming very close to key short-term support level, I'll be flipping to a short-term bullish bias for today on the euro dollar, at least for a potential counter trend rebound scenario to take shape. First resistance to watch 107.95. Only hourly close below 107.10 will invalidate this bullish bias that I have for the euro dollar for today to see the continuation of the impulsive down move towards the next support level at 1.0665. Now, sterling dollar. So sterling dollar very similar as well, coming very close to the support level at 125 figure level that we highlighted yesterday. So this 125 figure level is also confluencing with the lower limit of the minor swing low of 8th of December and 14th of December, and as well as the medium-term ascending trend line that I drew from the low of 26th of October, linking the lows of 1st of November, and right now linking the lows closely of yesterday's swing low as well. So with that, given the fact that the RSI also has started to exit from the overbought level after hitting close to an extreme oversold level yesterday, so we'll be flipping to a short-term bullish bias on the sterling dollar, also looking for a potential counter trend scenario to take shape with the first support resistance level to watch, pardon me, at 126.10. Only an hourly close below 125 figure level will invalidate this short-term bullish bias on the euro dollar, not the euro dollar, on the sterling dollar, pardon me, to kickstart another round of impulsive down move towards the next support level at 124.20/124 figure level. Okay, so to sum up overall, what we can see over here in the FX market is the dollar strength that was seen on last Friday and yesterday US session is approaching various respective key resistance level. So given the fact that the dollar strength is approaching key resistance level, and also some of the major pair is also showing dollar strength weakness in the short term. So with that, we'll be flipping to be less convinced today to see the continuation of this dollar strength going forward. And for the various pair like the euro dollar, the sterling dollar, will be flipping to a bullish bias, maintaining that bearish bias on the dollar yen, and flip to a neutrality stance on the Aussie dollar for today in the short term basis. All right. Now with that, stock index. So stock index, let's start with the Hong Kong 33 first. So on the Hong Kong 33 over here is that what we could see, it's actually managed to actually bounce off, okay, from yesterday's swing low. And while it bounced off from yesterday's swing low over here, it managed to shape a bullish divergence on the hourly RSI. So what we could see over here is that we do have 15,900 yesterday as a short-term pivotal resistance yesterday, looking for it to come down during the US session, but it didn't hit 15,300 level or 15,200 level. That was yesterday's swing low, and managed to go into east higher during today's intraday session. So given yesterday's positive price development during the US session, and as well as its bullish divergence that's being formed on the hourly RSI, so with that, right, I'll be less convinced right now to see a further down move on the Hong Kong 33 index to retest yesterday's low at 15,300. So I'll be using 15,300 as my short-term pivotal support level. And if you look at where it bounces off yesterday, it actually bounces off the 61.8 Fibo retracement of that previous counter trend rally. All right, 61.8 Fibo retracement. So with this set of what I call key levels that's being derived at 15,300 and its positive price action movement, as well as the hourly RSI bullish divergence, we could potentially right now see another round of minor counter trend rally to take shape in the Hong Kong 33 index. So with the Hong Kong 33 index, I'll be using 15,300 as my short-term pivotal support level for today. A breakout above 15,900 potentially will see another round of counter trend rally to retest at least in first step the 24th of Jan and 27th of Jan minor swing high area at 16,220. All right, so with this set of we call it emergence of short-term bullish elements taking shape in Hong Kong 33, I'll be flipping to a bullish bias today as long as 15,300 short-term pivotal support holds. Only an hourly close below 15,300 may invalidate this counter trend rebound to start to see another round of weakness on the Hong Kong 33 index to test the psychological support level at 15,000. And also one of a positive news flow that is supporting this short-term potential counter trend rally to take shape in the Hong Kong 33 index is another set of China regulation. So right now the China securities regulator is now tightening we call it a domestic restriction, putting away that is to actually prevent cross-border swaps to short Hong Kong stocks. All right, so it's to prevent what I call Hong Kong right now, there's Hong Kong exchange, there's this Hong Kong linkage, or the Hong Kong linkage where offshore funds could actually use this linkage to borrow Hong Kong stocks, thereafter to actually use these stocks as to open short position in the mainland stock market via this Hong Kong Connect program. So what I do over here is that the Hong Kong's we call it security regulator actually clamp down these cross-border swaps that is being used to actually to borrow Hong Kong to use as a borrowing for facilities to actually take a short position on the mainland China stock market. So that is also what I call preventing at least in the short term for further, we call it a downside shorting activity that is to be enacted in the Hong Kong in the China mainland stock indices, which is the CSI 300. So net overall, that could actually potentially see at least a short-term counter trend rebound scenario to take shape in the Hong Kong stock market. All right. So this is the best I could explain to you in terms of linking the dots, all right, from the news flow perspective. Now, other Asia indices will be the Japan. So for Japan 225, right, given the fact that it tends to move inversely with the Hong Kong market. So whatever Hong Kong index move up, Japan 225 tends to be underperformed. Okay, so whatever misfortune in Hong Kong will translate to a fortune in Japan 225. So right now, Hong Kong is showing some signs of positive counter trend rebound scenario. It may translate to a negative short-term movement in the Nikkei 225 at this point in juncture. And also, given the intermarket correlation, internally, the Nikkei 225 also showing some signs of exhaustion in terms of the current momentum that was seen yesterday. So previously we did highlight that 35,745 was my short-term pivotal support to maintain a bullish bias, at least to see a retest back to 36,540. It was tested on last Friday, and during the US session yesterday, it attempted to retest again, but it didn't retest and managed to trade lower thereafter. And I want to share with you doing this movement after that rebound from that 35,745 at the last week of January. That means we start to see price action go churn higher, and only yesterday it managed the RSI start to shape that bearish divergence after hitting 36,540. But previously, there's no bearish divergence seen so far when price actually managed to bounce off from 35,745. So what it means that the appearance of this bearish divergence after the retest of 36,540 recently, it is going to ask that this last push up here doesn't comes with enough momentum or strength that is being depicted by the hourly RSI. So what it means that this push up over here, or the price action going to churn up, this churning up is showing lesser and lesser momentum for it to carry through. So with that, right, potentially there could be another slide to retest 35,745 going forward. So with that, and given the intermarket correlation it has with the Hong Kong 33 index, so I'll be using 37,540 as a short-term pivotal range resistance to look out for a potential bearish bias to retest the bottom of the range again, the range support at 35,745. A breakdown below it exposes 35,350, which is the 38.2% Fibo retracement of that last impulsive up move from 4th of Jan to the 23rd of January this year. Okay, so i.e., given the negative elements that I share with you all on the Japan 225 or inherent in the Japan 225 right now, we'll be flipping to a short-term bearish bias using 36,540 as a short-term pivotal resistance. First support level to watch will be the range support level at 35,745. A breakdown below it exposes 35,350. Only an hourly close above 36,540 will invalidate this short-term bearish bias to see the continuation of the impulsive up move to retest the 23rd of Jan swing high area, which is also the psychological level of 37,000. German index, German DAX. So German DAX continue to actually be supported, bounce off from the lower boundary of this minor ascending channel that I drew from the low of 17th of Jan. So still no change using 16,795 level as my short-term pivotal support. Okay, I do not want to use yesterday's swing low because it's too tight. So as long as 16,795 short-term pivotal support holds, we will still maintain that short-term bullish outlook on the German 30. First resistance to watch for sure will be the minor range top in place since 13th of Jan, acting as a resistance at 17,020. Above 17,020 sees the next intermediate resistance coming in at 17,130 / 17,155. Only an hourly close below 16,795 will invalidate this bullish tone to see another round of minor corrective decline to retest the 50-day moving average, also confluencing closely with the graphical support level at 16,620. US index. Let us start with the Dow Jones Industrial Average, US Wall Street 30. So US Wall Street 30, within our expectation, it came down, retested the short-term pivotal support 38,200 / 38,080 before shipping that recovery. Okay, so as long as 38,200 / 38,080 short-term pivotal support holds, still maintain that short-term bullish outlook on the US Wall Street 30. First resistance to watch will be at 38,530, followed by the last Friday swing high area at 38,750. Only an hourly close below 38,080 will negate this bullish tone to kickstart another minor corrective decline towards the next support level at 37,800, which is the all-important previous range resistance, now turns into a pullback support. Nasdaq 100 continue to be the strongest performing major benchmark US indices among the four of them. So no change, 17,360 will still be the short-term pivotal support level to watch to maintain that short-term bullish outlook. First resistance, 17,750, breakout exposes 18,000 / 30, which is a Fibo extension level. Only an hourly close below 17,360 will negate this bullish tone to see another round of minor corrective decline to retest the next support level at 17,060 level, which is the lower boundary of this minor ascending channel support. Now, what we could have over here is spot gold. So spot gold yesterday actually dipped down due to the dollar strength. And given that right now dollar strength is approaching resistance level, and where it dipped down and managed to shape that recovery is back at 2015 level again, which corresponding to this minor ascending trend line support that I drew from the low of 18th of January. And what we could see over here is that price action also managed, the RSI also managed to shape a slight bullish divergence as well, while price action continued to shape lower low. similar low on the RSI. So that's considered as a slight bullish divergence. So with the slight bullish divergence, we will still be maintaining that short-term bullish outlook on spot gold, but using 2015 as a short-term pivotal support for today. First resistance to watch definitely for sure will be yesterday's Friday's minor swing high at 2040 level. Only hourly close below 2015 will invalidate today's bullish outlook to see us further slide to retest the key medium-term pivotal support at 2000, which is also conferencing the psychological level as well for spot gold. West Texas oil, WTI crude. So WTI crude yesterday managed to inch much lower and hit the form a lower low, coming very close to the support level that we highlighted, 70 50 70 20. So while price action came down and formed a lower low, but the RSI managed to shape a higher low and did a bullish breakout from the previous parallel descending trend line that I drew earlier, and right now is trading back above the 50 level mark as well. So indicate to us that there's some signs of short-term bullish momentum coming back into the picture. So I do not want to use yesterday's minor swing low area as my short-term pivotal support level because it's too tight at 71.38. So I'll be using 70 50 70 20 as my short-term pivotal support level to look out for at least a potential potential bounce scenario to take shape today for West Texas oil, with the first resistance level to watch at 74.20, with so confluence with the 50-day moving average acting as a resistance, and as well as the minor swing high of last Friday. So as long as 70.20 short-term pivotal support holds, flip to a short-term bullish bias with the first resistance at 74.20 level. Only hourly close below 70.20 will see the continuation of this decline to retest the minor swing low area of 3rd of Jan, acting as a support at 69.20. Okay, so with that pretty much sum up for today's short-term daily outlook on the West Texas oil. So other economic data to look out for today will be a rather quiet session. So there is no release of key economic data on the US for today. The only data to look out for the European session will be retail sales for the month of December that is out at 6 p.m. Singapore time. So with that, do have a great day ahead, and we shall speak again tomorrow. Thank you.